Morning, Micromep here, doing a video here on Intel. So Intel is down 10% as we, well, 9.5% as we speak. It's gotten hit hard after earnings. Intel shares are trading lower after the company reported worse than expected Q1 sales results and issued earnings per share guidance below estimates. Also, JP Morgan and Goldman Sachs lowered their respective price targets on the stock. Um, let's see here. Do we got any numbers? Intel, not too long ago, I want to say was trading in the 40s. So it's come down a lot and pretty quick. Let's pull up here and we can look at the, I can go over here to Thinkorswim. Might be a little bit slower, this chart. I don't know why Thinkorswim, when I have a lot of programs open, it's laggy compared to, for example, the uh, Tasty app, Tasty Trade. Let's see what IV rank is out here in Tasty Trade, INTC. It's a little slow too. I have a lot of apps open. Let's see here. It's thinking. 21, so it's gone down. It was high before earnings, and let's see. Wow, I think this one's not even working. Continue. Come on. All right, here we go. So it's pulling up the chart. Wow, it's really dragging today, the system. I have a lot of apps open, so maybe that's why. And I'm recording too, so let's see what they have for IV. Well, they have 37%. So I don't like to buy options, so um, possibly can do a put credit spread. I was trying to pull up the chart. Let's see here, chart. Let's look at the month chart. So it went basically from 44 and we basically almost at 30. So this thing's gone down almost $15 in basically a straight line. Last time I hit a low of about, I want to say it was 25. It was at a year ago maybe. Over here the low was 26.85. So that was the low. So we're getting down to those levels. So what I would do here is trade, hit the trade tab, and I'll just do a simple put credit spread where you sell an option right underneath the stock price and then buy another one to protect you. But my thing is really dragging. So here we go. It's really, really slow. So short put verticals, and you're gonna go. And here we go. So we want to go out. The sweet spot would be uh, probably gonna go out. I don't know if the weeklies have good action. Let's take a look at the table. You hypothetically you want to do maybe 42 days, but that would be weekly options. But let's see if there's enough volume in here. It's really not a lot of volume here, probably compared to uh, the monthlies, the monthlies here that are see, 56 days out. You see how they have more volume here? So that would probably be better here, these here. I hypothetically don't want to go out that far out, but I'm okay. I can live with that. So we're going to go back to curve here, and we're going to move the expiration to 56 days out. So let's see what maybe a 30. So if you sell a 30 and you buy a 25, it gives you 80-cent credit, basically. It's a 72 probability of profit on this trade. That's what POP means. Probability of profit. It's 26 deltas, meaning you're basically long 26 shares. Each one delta is basically one share. If you buy 100 shares, you have 100 deltas. Um, so this one will collect you basically 80 cents. So you're basically tying up $420 to do this trade to collect $80 and maybe buy it back if the stock bounces back for 50% profit and make $40 on basically 420 buying power. So almost 10%. So if you calculate the math. If you wanted to be a more, let me see if you go here and you want to be closer and not risk so much. So if you sell the 30 and buy the 29, you collect 29 cents. You have a 67% probability of profit, and you only tie up $70 if you wanted to do that. So let's set this one out for $30. We'll set that one out. That's one trade there. Maybe if you want to go closer and do 31 and let's say we gotta go out to 56 days. 31 and 28, let's say. You can collect 88 cents on this one and risk 212. So maybe, I mean, that's pretty close to the money on that one. So I don't know. Oh, I set one there. I sent one out. Let's see what 28, 27. Nah, not much there. 31, 28, 88 cents. Maybe let's send this out for $90 and put a couple trades out there. And that's how I would trade Intel. Even though the IV is not that juicy, you pretty see the IV. If it's high, it lets you get further away from the stock price. But I think Intel being down 10% and getting close to its low and giving yourself 56 days, we'll see maybe a bounce eventually. So I have those two working in today's let's see here, working. I have these two. I'm 2 pennies off here on the Intel and 1 penny off here on the Intel on the trades I just illustrated. You see they're working here. So hopefully I get filled. I'll do a further update as the day transpires. I hope this is a good educational video on how to trade a stock that's come down some. And not a lot of capital, as you can see. One of them you just need $100, and the other one I think you needed it was $200 or $300. We could put it up again here. Go 56 days out. 28, 31. You needed this one. You need $214. So just trade small and trade often, and this hit singles and doubles, and this is how I do it on a daily basis when I see some opportunities out there in the marketplace. I hope this is a great video for you. Subscribe if you like this content. I'll do more frequently videos on how do I trade on a daily basis and how to be profitable. Anyways, see you in the next video. Bye bye.